Hey traders, welcome to Charts and Coffee. Hope everyone's doing great. All right, happy Monday, everyone. Welcome, welcome. Good to see you all. I know I saw some of you on Sunday for our weekly report. This week, by the way, speaking of weekly and watch list and reports, this week I have the weekly watch list here at Simpler Trading, and that will be going out, I believe, later on today. Just a quick sneak peek of what I have in store for members here. And it's really a breakdown of the hot zones that we have. And it's very much a look at, it's the look at the hot zones that we have. And it's very much a look at what type of trends do we have this week. And I think what's really interesting in terms of the week is that, of course, it culminates with non-farm payroll on Friday. But what's really interesting is the path there. We have jolts this week. We have the manufacturing and the services ISM number this week. We have more FOMC speakers than I even want to think about. This isn't even a full list. You'll find even more over at tradingeconomics.com. So we just have a sprinkling of FOMC speak throughout the week as we get to non-farm. Remember that every growth number, inflation number, and jobs number either does one of two things. Either it's going to solidify the Federal Reserve's resolve, it's going to strengthen that resolve to be on the rate hike trajectory that we're on, which is putting us potentially between 4.5 and 4.75 points sometime by about March to May of next year. And it will keep them talking clearly about the fact that the hikes that they are doing right now are not necessarily hurting the economy. Again, as long as jobs stay strong, growth stays stable, and inflation doesn't tick up too badly. The Fed pivot, as many traders and investors are waiting for, because let's face it, when does the market turn around? When the Federal Reserve pivots on their message. And it's never a subtle thing. It's a very all of a sudden thing. And that will most definitely be not because the equity markets are down, gang, necessarily. It's because what they can now say is, all right, hikes are starting to hurt, sure, stocks, but we're seeing jobs negatively affected, or we're seeing growth dramatically negatively affected. So when they observe, okay, we need to stop, it'll be a pretty sudden and sometimes informal messaging, meaning it may not even be messaging that accompanies an FOMC statement or press conference. It could be something at an interview. It could be just an offhand remark during some engagement. That's what a lot of traders are waiting on. We don't want to trade in expectation of that pivot, but we want to be aware that that is what's going to ultimately turn this whole picture around. And then I go through into a number of key markets that have trends, and then remind everybody, gang, look, I think a lot of you know this. The point of trading is never predicting, right? There's some great analysts out there that can talk about what the markets are doing now and some of the different pieces. But remember, our job as a trader, we don't get paid for analysis, do we? We get paid because we find an entry, we know how to manage risk from that entry, and we have a target. And that's really it. There's a great image, and I'm often reminded of this when traders, and I'm as susceptible as anybody, kind of get lost in the whole idea of falling in love with analysis. And it reminds me of this great quote from Bull Durham. Good friend of mine used to say, this is a very simple game. You throw the ball, you catch the ball, you hit the ball. Sometimes you win, sometimes you lose, sometimes it rains. Gang, that's trading in a nutshell. That is absolutely trading. So that's what I'm trying to remember, that this isn't about me looking at different markets to try to understand where the market might go, but rather where is it now and does that represent an entry? All right, so with that being said, gang, again, great to have you all here. Let's jump into the questions, shall we? Let's do that. All right, I've got a different camera today. Hopefully this one's got a better sync with the rooms. I saw the camera before was kind of out of sync. So I'm using a very old school camera. Hopefully it's working well. All right, let's get to it. First of all, Ken. Hey there, Rocky. How are you? Can I review the 6C? 6C. All right, the bot says it's spot on. All right, awesome. All right, can I review the 6C futures contract? Yes, of course. 6C is in a downtrend. Now, what is this downtrend reflective of? Downtrending in the Canadian dollar, but still either stable or uptrending in the US dollar. We know both of which are true. The dollar is not only stable, but moving higher, and the Canadian dollar is moving lower, which really isn't a surprise because not that the Canadian dollar moves in lockstep with the crude oil market, but crude oil is in a downtrend. XLE, by the way, energy stocks are not necessarily in a downtrend, but crude oil is, and that's going to negatively affect what we're seeing in the Canadian dollar. Short the rip, my friend. I would definitely focus on shorting the rip. Now let me pull up the loonie here. So that's 6C1 exclamation point to pull up the continuous contract. I'm on the Trading View charts. You'll see that we have that really strong downtrend. And if I want to compare that with what's going on in crude, I can pull up the CL1 continuous contract on crude oil. And you'll see first two rows, that's momentum and trend on the Canadian dollar futures moving lower. And that's momentum and trend on the crude oil market also moving lower. That's those red dots mean there at the bottom of this chart. So thank you for the question, Raghee. Short the rip, my friend. Wait for a bounce into the wave, 21 propulsion, a volume ledge. You can even anchor a VWAP. I'd say it might even be interesting to anchor a VWAP to, let's see, I'd actually be curious about anchoring a VWAP to 13 September. Let's see if I can't do that. Yeah, that might be an interesting anchor there. That high there. Yeah, that might be another, that's going to be in front of the 21, but that might be a really good, interesting anchored, always an AVWAP. And that could be an interesting one there. All right, moving on to, hey there, Karthik, how are you? Your thoughts on this? The Fed announced they will have a closed meeting today at 11:30. And let's see, what does that mean in terms of volatility? Remember, if it's a closed meeting, clearly market participants are going to be aware that there could be sound bites and post-meeting little streams of information. It's going to be a very difficult thing to time. Karthik, this is what I can tell you. I'll be day trading with the Sector Secrets folks until 10:35 with our soft cutoff, but with a window that's open to 11:30 if the structure is there, especially if we have some initial balance breaches. So one thing I can say, not that it's a fix, but it's something to keep in mind. I'll be long gone. Do we have to engage the market at that time of day? In fact, my usual advice is be long gone as a day trader at 11:30. And if you're looking at swing trades, if you're looking at daily time frame clarity towards the second half of the day, look for anything after 1:35. Look for the last hour of the day and see what kind of movement we get. But, luckily, the way that I've structured my day trading life, and I've taught many of you, is be gone, right? Be gone by that time, right? And not gearing up for more trades, but rather managing anything that is open and cutting off from new fills, from new entries. All right, next up. Hey there, John. I'm a Futures Gold member. Very cool, and thank you. And already have the trade flags on TOS. Cool. How do I get the JT multi-trend indicator at the bottom of the screen? So, John, those usually come with different classes that I do. I'm sure the next one that I'm going to be doing on November 5 will be no different. It will probably make it available for that as well, and it's available in the Sector Secrets Mastery. But remember, if you have the trade flags, let me show you here. Let me grab my drawing tools. All right, so what you have is right here. That just happens to be sitting up in the upper left-hand corner on Thinkorswim. It's the bottom left-hand corner on TradingView. This is the current read of the multi. Now, the multi gives you the history, so you can see those transitions, right? And how long has something been trending up, down, or is it just sideways? So you have a history, but remember, you've got the hard right edge of that read with the flags. And then usually my classes in the Sector Secrets Mastery, we make those, we make that, it's a premium tool. We make that available there. But I'm glad you're using the flags, and I hope you're getting a lot of benefit from them. Thank you so much for being a member of the Futures Room. Very cool. All right, moving on to, let's see here. Hey there, Sue. What are my thoughts on Abbott? Sure. So the thing to remember about Abbott, and let's make a quick pit stop in healthcare. Healthcare is on the daily time frame in a downtrend. It just turned into a downtrend, confirmed this last week. Rips to the upside, maybe anchor the VWAP to September 12. That could be a really cool level to look at. And play a bounce to that level. One thing you can do if you want, and I'll usually anchor it to the close. You can anchor to highs and lows depending on what you're looking for. So those are things that, those are volume tactics that you can use when you're anchoring VWAPs. One bit of advice: never use a rolling VWAP. It's not going to be nearly as accurate as pinpointing the anchor to highs, lows, volume spikes, etc. That being said, XLV is moving lower, and what's going to be difficult for ABT is it was already maybe by a session or two moving lower. So what are my thoughts? Short the rip. VWAP 21, propulsion. Those would all be excellent levels to consider for if we move higher, take advantage of that. If we happen to at some point get neutral in the underlying market, if we at some point happen to get neutral, so the lower yellow row, or let me highlight it here for those of you that have the trade flags, or the trend flag here, the second one, so either the lower row or the trend flag, if and when that goes yellow, that would be a good time to start to look for a 1, 2, 3 pattern, or potentially a minor low pattern. Minor lows are great, but I don't want to start getting too pattern specific on reversals in the context of a downtrend. I'll look for a minor low. If we go neutral, I'll look for a 1, 2, 3 if we go neutral. But in the meanwhile, structure dictates strategy. And the strategy right now is short that rip, right? Short the rip. So thank you for the question. All right. And yes, for those, some of the tools, gang, that I make available in the futures room and the options room are the trade flags, propulsion, the Darvas 2.0, wave, grab, my slow stochastic setting. So there are a number of tools that I make available in a layout in the room drive of each of those rooms. And it's called the Raghee's 3-panel TOPS layout. And it shows you what indicators I have on there. And it shows you how to set it up on Thinkorswim with that shared item. There are a handful of things that I make available to my mastery folks, like a slightly larger list of hourly price movement ranges, as well as the multi. So it just depends on what room you're in. And then, of course, my premium folks are the HPMRs. I know a lot of you are waiting with bated breath. I've been talking with the Lorna bot, and she has some cool updates. And I believe, hey, bot, is the SPX on that list? I believe the SPX is potentially on that list too. And we'll be adding that as well as a few other symbols to that ever-growing list of updated HPMRs. All right, next up. Is there a difference? Hey there, Robert. Is there a difference between, bear with me here. Is there a difference between playing spreads on SPY and SPX? Oh gosh, yes. Yes. I think now when we're talking options on the two, I think the major difference between the options on the SPY or and the SPX are just understanding what the SPX options are. SPX options are European style options, which means they can only be exercised the day of expiration, which is why you see that very volatile 0 days to expiration, 0 DTE, as many of you probably have seen before here at Simpler. The fact that they can be exercised only on the day of expiration creates a lot of that volatility. In other words, everyone's got to decide to do something on the very same day. So you have a mosh pit of a market on the expiration date, which means you've got a lot of exaggerated moves, a lot more volatility, right? So the spreads for SPX, I have found in order to handle that volatility, tend to have to be a little wider. I just watched John's class. I know many of you have. I watched some of that and I watched his setup. So I'm going to mention John because I don't trade the SPX, but he does. Now, whether you trade the ES, MES, futures, options on the ES, SPY, options on the SPY, or options on the SPX, remember, you're still trading the S&P. It's the volatility that's going to be a whole lot different. It's the risk that's going to be a whole lot different. And I've seen that with the wider spread, he's been doing pretty well with those trades. So while the setup is a little bit higher risk, the probability is very, very good. So you got to think about that balance between I'm working a high probability trade, but in those occurrences that I get stopped out, can I afford to get stopped out with the size account that I have? And it's not a one size fits all, right? But the difference in terms of playing spreads that I've found, that I've observed, Robert, is the width of the spread. And then, of course, remember, US style options like the SPY versus European style options like the SPX. The volatility on the day of expiration on both is going to be high. But remember, it's going to be far higher on SPX because everyone has to, if someone's going to exercise the option, it's got to be that day. As opposed to, you might say, well, Rob, how's that different? If you have SPY, you can exercise that option anytime you want, right? In terms of what it is you have to do. So that's probably the biggest difference. Again, they can only be exercised on the expiration date, while SPY can be any time between the time you buy them and the expiration date. So I hope that helps. Hope that makes sense. And the volatility because of that is the way that I look at those. But again, MES, options on the ES, options on the SPY, and options on the SPX are all really great, cost-effective, relatively speaking, lower risk ways to go. I'm a directional debit trader, which is I like to buy calls, I like to buy puts. So I can do that in a cash account. And then my risk is a certain percentage of that option that I bought. So I'll typically not play spreads personally. All right. So thank you, Robert. Hey there, Alan. How are you? I know you're a Florida lady. I am for many, many years. Ian, we got very, very lucky with Ian here on the East Coast, which is where I am. And specifically Broward County, we really, really quite literally dodged this thing. The folks on the West Coast, definitely not. We have a few members that are over there who really got hit hard. And my heart is just broken for them. That was a nasty, nasty storm and storm surge. It was a beast of a storm. And we have some members who are in the aftermath of that right now. So, of course, all thinking of them. It was good to see some of them get online, which tells me they're safe. But they've said, yeah, we're not at home. We've been, we're not able to go back home. Roads are blocked. Yeah, we got very lucky here on the East Coast of Florida. I appreciate that. It was nice to see the bookshelf. I've been trying to clean up the bookshelf. I got a couple prints that I put up there. So yeah, I've been trying to clean it up a little bit, but I got one this size in another room. So I definitely have to reel in the book buying, but I appreciate that, Alan. Thank you so much. All right, gang, as always, thank you for being here for Charts and Coffee. Thank you for caffeinating and dominating with us. A lot of you that are wondering, the next class is November 5. I'll be explaining more and more about what that class will be about towards the end of this month. So it's coming up, gang. We're pretty much a month out, getting very excited for the prospects of how well volume-based analysis has been working. Gang, I'm not here to tell you where the markets could go because frankly, I don't know, right? It's not my job to predict. It's not our job to predict. So you don't have to work that shift, right? You don't have to be burdened by having to be a fortune teller, reading the future. But remember that if we can find an opportunity in price, know what our risk is, know what our target is, we're in good shape. And if this environment is still feeling very, very risky, day trade. A lot of our futures folks and mastery folks have said this is the only way to keep sanity right now. I agree. It's still 80+% of what I do at the moment, day trading. It only matters what kind of trades we can take and whether or not they're working. Leave the analysis and all that stuff to the talking heads on television. Where's the entry? What's the risk? Where's the target? Everything else, aside from hot zones, is completely unnecessary. Focus, streamline. There is sanity to be found in these markets. Be good to each other, gang. I'll see you in the next show tomorrow, 9 a.m.